Shane, we have a new Prime Minister.
We do.
Clients are rightly concerned about how this is going to affect their investments, the markets. What's the Beaufort Investment view on this?
We, at our most recent investment seminar, we did a survey of the IFAs, and it came out Brexit was probably the number one concern for clients, not necessarily the IFA's concerns, but for the clients' concerns. It's obviously new Prime Minister, 31st of October looming, and they've all gone on holiday as well. It is concerning, but for us, it's very difficult to build a portfolio that's going to do well in arguably a some sort of deal scenario or a no deal scenario. For us, we want to avoid situations where we have binary outcomes. So it's going to sound really boring, but it's about having a diversified portfolio across the different risk ranges. It's making sure that whatever outcome for Brexit, it doesn't sink or set on fire the portfolios. It's something we have to sort of come to terms with, that we don't know what the outcome is going to be. So when that outcome uncertainty is so high, it's something we cannot model in the portfolios. It's just about having a good level of diversity. It's something we definitely don't ignore. We keep a close eye on what's going on. I think politics is probably going to be the running biggest uncertainty for the next 2 or 3 years. Once we've got whatever it's going to be, Brexit out of the way, it's definitely going to turn around to the next presidential election in the US. And that in itself encompasses things like the trade wars and central banks. Because you've had Trump really on Jay Powell's back, who's the head of the Federal Reserve, saying interest rates are too high. And we would expect at the end of next week them to reduce interest rates. So politics is definitely front and centre. And when politics is front and centre, you have to rely on a really well diversified portfolio.
So the view, the thoughts for the next quarter?
We've had a great 2019 so far. I think in the previous videos and in the quarterly reviews we've explained how we thought 2019 would be good based on the metrics of 2018. We still think we're going to have a very positive 2019. But the market is the longest market rally ever. So it's not going to last forever, but it doesn't mean it's going to necessarily die anytime soon either. But we have to be cognizant that it's going to be more volatile as you get towards the end of this rally. What we have seen more recently is the central banks coming back and almost reassuring the markets with their looser monetary policy now and cutting interest rates. So this could last longer than anyone fully expected.
Great, thank you.
You're welcome.